Now, you know I did a video about Silicon Valley Bank going in trouble. Well, the news today is that it's seeking bankruptcy protection. This is the second biggest collapse in banking history in the United States. So, what's going on here? A few days ago, we got the news that Silicon Valley Bank might be in trouble because they were not able to repay all depositors their money. So, since that news, the government has stepped in and they promised that, hey, everybody, your money will be safe. Don't worry. We will come in and help you out. We will bail you out. We're not going to bail the banks out. We're going to bail you out, your deposits. But is that really the truth? Well, the truth is that they say, hey, it's okay. We will give your money back. But in the meantime, we will increase the fee, the FDIC, for banks, which is like the insurance fund that banks will pay over time to make up for it. Well, the issue is that that money will eventually be passed on to the consumers, to you, from the banks. So, in a way, it's an indirect bailout from the taxpayers. Once again, the banks won and we lost. So, what's going on? I have this special video here from the exchange between Congress and Janet Yellen, which is the Treasury Secretary of Joe Biden. So let's take a look at this video and see what they are talking about.
We're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVB just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
Now, what she said there is huge. It's telling. Basically, this is another scenario of too big to fail. So what she's saying is, if the bank messed up, they made a bad investment and not able to get the customer's fund back, then they will fail. And when they fail, that means her and her board and the president, will determine if the bank's failure could cause a wider systematic risk to the economy. Well, she's basically saying if they're too big to fail, we will go in there and help them out and bail them out. Now, what does that say about the rest of the other banks? Well, this will encourage risk-taking for other banks, because what's the point of managing your risk when the government can just come in and help you out? It's like me going on YOLO on a crazy shitcoin, and then if I get rug pulled, I can not worry because the government will bail me out and say, oh, it's okay, you'll get your money back. We'll take on the loss. This is crazy.
So what is your plan?
Made that determination.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks?
That's a good question, because now people were like, hey, the regional banks, like the smaller bank, like SVB, they're not safe. Why should I put my money in there, right? So why not put my money in the big banks like JP Morgan Chase or Bank of America? Because they're bigger, they're more established. Why would I put it in a small one? Well, the difference is that these smaller banks like SVB, they are tailored towards like startup ecosystem. They're not, JP Morgan is a big bank, but their main business is actually investment, not really commercial banking. So that's the difference.
We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That's a good call out because everybody's removing their money. There's a small bank run right now on regional banks like First Republic, Silicon Valley Bank, Silvergates, Signature Bank. People are rushing to get their money out. So all of these, there's a small bank run on these companies right now, and that's why if you look at the stock, like First Republic, they just got a crazy injection from J.P. Morgan Chase and all these other big banks because they don't want these smaller banks to fail. Because if they do fail, then it will create a chain reaction to the economy. So, but with the bank run on these smaller companies, that means like they're exposed. People know that with the fractional reserve system, the banks do not keep most of your deposits in there as cash. They reinvest that money in order for them to make money. So therefore, they don't have enough money to cash everyone out.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're
it's-
fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
Well, that's a pretty very wild statement because the FDIC insures your account. If you're like a small depositor, you probably don't have 250K there. So FDIC insures you up to 250K. But the banks like, Silicon Valley Bank, they take on businesses. So startups, they have like millions of dollars in there and they do not insure fully. But what Janet Yellen, like what the government just did this week is that they're saying, oh, essentially we insure your deposit unlimited. Like no matter how much money you're there, we will bail you out. So if you're rich, we will bail you out. Your insurance is unlimited. But if you're poor, you're working class, it's only up to 250K.
You're not fully insured. And
You
the big-
were at Signature and
the
it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound.
She likes to say this like safe and sound, try to keep the market not panic. Try to get people to not go out and withdraw their money from other banks, right? Because like I can tell you now today, if everybody goes to their banks and take their money out, there won't be enough money for everybody. This is true for all banks, even for big banks like J.P. Morgan. That's the flaw of the fractional reserve system.
Depositors should have confidence in the system, and we took these actions.
So there's a special assessment that's been done on community banks in my state and all banks across the country. Was there any discussion that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
I think, I'm not certain what the rules are around that. That's for the FDIC to determine.
It has been reported publicly that SVB had a large number of Chinese investors that are there, including some that were companies directly connected to the Chinese Communist Party. Will those individuals, companies, entities, and investors that are Chinese investors be made whole based on assessments in my banks in Oklahoma? So what I'm asking.
That's a good question. I didn't know there were foreign investors in SVB. In that case, they should not be made whole. I think the best case, the best way to work this out is to make sure that the owners of the banks, they should go to zero because they didn't do their due diligence, they were greedy, they made the banks fail. So the depositors should be made whole, but the bank should fail. And which is kind of exactly what's happening now with SVB seeking for bankruptcy.
Asking is, will my banks in Oklahoma pay a special assessment to be able to make Chinese investors whole from Silicon Valley Bank?
Uninsured investors will be made whole in that bank, and I suppose that could include foreign depositors, but I don't believe there's any legal basis to discriminate among uninsured.
I get it, but
Oh, damn.
I'm just saying my community banks are going to pay this additional fee. It is always fascinating to me as well, the conversation that taxpayers are being made whole in this, and taxpayers are not going to have any kind of consequence on this. I'm sure my bankers are going to be very excited to know they no longer pay taxes.
So he's calling it out that, you know, with First Republic Bank failing, Silicon Valley Bank failing, now the banks, the Fed's coming in to bail them out. Now all the other banks will have to pay this extra fee to the to the FDIC to keep the money insured. So this is like one bank fell, but all the other banks had to pay for it. But like I said earlier, that fee is going to be passed on to the consumers. You are probably going to get less interest. You are probably going to get higher fees when you use your local banks. And that's just the way it is. It is a bailout at the end. So that is it for this video. I hope you guys enjoy it. Let me know what you guys think. Should the system, you know, be redone? Just replace the whole thing with cryptocurrency? I don't know. I think the whole banking system is flawed, and this whole thing here exposes that faults. And if there is a bigger run on bigger banks, we're going to see big problems in the economy. So let me know what you think. See you guys next time.